Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, August 4th. As always, please set your video player to 1.25x. I think you'll find it much more efficient and you won't miss anything. Taking a look at futures, equities, I'm just calling it flat. We're ticking green, ticking red, not much going on. Oil's flat. Natural gas is up 1% after being up 3% yesterday. I've been hearing a number of reports that Europe they're just getting crushed on natural gas prices. It's been unseasonably warm over there, and Russia's not coming through with the supply they need, so they're really hurting over there as far as natural gas pricing goes. Gold was up a little bit, but it's really not responding the way that I had hoped. Maybe it will here soon. Looking at earnings today, we've got CVS before the market, Royal Caribbean, and General Motors. After the market, there's quite a number that might be interesting. We've got Roku, Uber, Etsy, Fastly, Cuervo, and Western Digital. And on the macro front, we've got Vice Chair of the FOMC, Richard Clarida, talking at 10 a.m. I think that one's going to be closely watched. If you remember, Monday afternoon, Fed Board Governor Chris Waller was out popping off on the afternoon, and the market really didn't like what he had to say. And, I kind of chalked it up to a rogue member trying to make some headlines, trying to be a hot dog, saying they're going to do this and do that, mostly tightening sooner than everybody expected. I was surprised because Powell usually has things kind of orchestrated to, put out the company line at least. So I think this morning we'll find out if it was orchestrated. And what I mean by that, was Waller sent out there to send a hawkish message? And now does Clarida follow that up at 10 a.m. with the same message? Or does he go back to the Powell playbook and script, echoing what Powell said at the FOMC meeting just the other week? So we'll have to watch that pretty closely. So let's dive into it here. And I wanted to say that yesterday afternoon, I got a unsolicited phone call. Had no idea who it was. Came up on my phone as, unknown caller. That's always dangerous when you pick up the unknown caller. You could have, an insurance salesman, or it could be your mom at the grocery store whose phone died and she had to borrow someone else's. So it could be anybody. But for whatever reason, I picked it up, and to my delight, it was one of our subscribers from the YouTube channel, and she wanted to talk to me about some trading and give me some feedback on the videos that she had heard from a friend. And so we ended up talking about trading for like 45 minutes. It was great. She lives up let's just call it New York City, and is involved in trading. And so I thought that was great. So you know who you are out there. If you're listening, I really appreciate that. And one of the questions that she had was, how do I register for the extra content? So what I've done here in this box, for those of you that are just subscribed to the YouTube channel, you're probably only getting half of what I do. The other half just goes out to subscribers of all my content. If you just go to tradersprofitcompass.com, on the home page, you'll see a place to drop in your email address. It takes 5 seconds. But the important part is it's a double opt-in registration instead of just a single opt-in where you just put in your email and it's over. The email server will send you out a confirmation and ask you to click OK on that email, and then you'll be on the list. But what happens sometimes is those emails, because it doesn't really know who it's coming from, will throw that into your junk folder, and then you'll never get registered. So look in your junk or spam folder if you don't get it within 10 minutes, and just look for it, and then hopefully you'll find it and click on it. If you get stuck, you're always welcome to email me. There's my email address, chris@tradersprofitcompass.com. And if you want to follow along on Twitter, I'm at Profit Compass. I'm not as active on Twitter as I should be, but every once in a while I will put some stuff out on Twitter. So again, thanks to that user who reached out to me and had a really nice chat, and I really enjoyed it. So moving on to the charts, U.S. dollar, we've started this little rollover, just consolidating here, not doing a whole lot. Yesterday, rates stabilized here down at the lows, so that gave some breathing room to the cyclical trade. And as a matter of fact, I was looking at the Spider ETF performance, and really the cyclicals led yesterday's move higher. XLB, XLE, industrials, XLI, and financials were all the leaders yesterday. So I thought that was pretty interesting and something that we've got to watch. So if we've got time at the end of the video, I'll run through some of those charts. But we've got some lines in the sand that are alarmed, and we can review that. TLT still a positive trade. I would just set your stop a little bit below 150 if you're in it, and if rates take another leg down, then you'll extend that win. Nothing going on the breadth indicator. We're still kind of stuck. Nothing going on the oscillators. We're right in the middle of the range, so don't think that I've forgotten about that, but there's no sense showing it if nothing's happening. We do or have had some bullish developments in our equal weight SPY. You'll see here we had the consolidation range from 146 to 152. So that's a $6 range. We've broken above the range, and we're trying to recapture this uptrend line. But what was interesting was that as far as yesterday's performance went, up 0.84%, that was right in line with SPY, the cap-weighted one. So what that tells you, when equal weight is doing just as well as the cap-weighted, that more stocks are participating, because it's not just Apple and Amazon and the familiar names of those mega caps. So when you see those on an equal weight basis, and we're breaking out here, and it's hard to see, I don't have it zoomed in close, but you can see that all the EMAs are starting to curl up with price above not only the trading range, but above the 8 and 20 day as well. So that's bullish. And we see that reflected in the PPO momentum that has reset and put in a bull cross near the 0 line, and RSI has broken out above the downtrend line on RSI and looks to be driving higher. So that's nice to see on the equal weighted SPY. Now yesterday, looking at the SPY 2-hour chart, I'll just characterize it as a terrifying plunge, right? Down a couple points. We dropped down, we lost some key levels, and we got right down to the midpoint, a little bit below, and then they very impulsively, I mean, that was a huge candle, going from 436 right back up to 440 in one shot. So that was a very impulsive move off the deck, and now we're back up threatening these highs in the top of the channel here at 441 spot 75, something like that. And here it is on the 30-minute chart. And I think this particular chart illustrates it nicely, that all we've done since July 23rd is oscillate within the box. So we've really got to take out the highs of this box, or if we get rejected here at the box high, the consolidation high, and roll back over, then you'd have to think your expectation would be to come back to the bottom of the box, because we've made several round trips. Top, bottom, top, bottom, top. You know, you'd like to get the breakout here rather than having to recycle back down again. But that just shows you the power of these technical levels, where might not have been as easy right here, but yesterday we came right back into that support level, and then that's where they bought it. So that would have been a very objective place to either try a long, or say to yourself, if you've got your portfolio set up that, you know what, we lose 436, I've got to take some risk off. Just because if you lose 436, then you could be down here at 431, and a flash at the bottom of this channel, well, 433, but you get the idea. If you break that box low, the technical target would be the width of this box projected down. I think we did that yesterday. Is about a little over $5. So your technical target would be 431, and you certainly wouldn't want to just ride that out. So that was a really key spot for them to step in and buy. So today, we just need to see if it pops the highs. And if it does, then we'll be thinking about, hold it and go higher. So we're at a kind of a critical juncture here. Yesterday we had the symmetrical triangle on the Qs. Came down to this prior low. They bought it right back up and ripped it the other way. Today, I think 367 is your pivot. I think that's pretty clear. What I want to see here, we got the breakout on RSI right here, and I want to see the bull cross on PPO, and then this rotate up higher. That would be a nice technical development. Here it is on the 30-minute chart, and you can see that 367 is the line we got to take out on the bulls, and then we can look for 368.50 right back up near the highs. If this were to get rejected, you could come back into 365.5, where hopefully there would be some support here, because remember, this trend line will extend right on through now that we've broken out from the symmetrical triangle. So anyways, that's where we're at on the Qs. IWM sold off pretty good with all the other stocks and indexes. Came right into this high 217s, 218 area, and they bought it up. And now we're trying to punch back above this uptrend line, which has become resistance. And so if we can get above that 220.50-ish kind of level and knock that out, we can go up into like 222.25 and then up to 224, where you'll see we ran into trouble before. So really 224 is the key level that needs to be taken out to move higher. I mean, we can move higher just up to resistance, but that's the key level that has to be taken out on IWM. Here's the blow up on that. You've got a level here at 222, and so I would fully appreciate anybody that says, you know what, with so many head fakes, I'm just going to wait for 222 to be taken out, and then I can, try to get long for this $2. And if everything aligns, we can get a breakout and go higher. You might say, that's not worth trying to capture this little bit of it's a dollar, but there's not a lot preventing it from just rolling back over. So might be a good strategy just to wait until price clears 222, then hit it there and look for 224, which would be a nice trade in and of itself for a little intraday trade. But then longer swing traders, as we've discussed, 224 is a really important level on the daily chart that I want to see taken out before we can go, make another run at the 230s. So know your time frame, know what you're trying to do, create a little plan, and then stick to it. If you're active intraday, you can do all this kind of stuff. But if you've got a real job that's paying bills, I would just hit it once 224 is taken out. Facebook tried to make a little move off of this 348, which we discussed yesterday. Got a nice $253 move up here. Now we're back at the bottom of the prior gap. So if we can pop 352, I think your target's going to be 358. And then, of course, if it can take out 358, then we've got the earnings gap that we can go after and try to get filled. Apple had some nice signs of life yesterday with an impulsive bar that took out this resistance level at about 147 and then moved up to 148 where it found resistance. So I bought this one here, and so obviously what I'm looking for is a break above 148 to open the door back up to these prior highs. Where I would be concerned is if this rolls over back below 147, because then it would look kind of like a fake move and bring price back into this 145.5. And I wanted to mention, and I didn't do a good job of this yesterday, but pointing it out, look at all the reactions right here at 145.5, where we spent a good 8 hours of live trading right at this level, and none of the bars ever closed below. So if you were willing to buy a little duration, you could have set your stop, just below 145.5 somewhere, and say, hey, we have found some good support at that level. If I'm wrong, I take a paper cut, but if I'm right, this is the reward for being patient right here, that impulsive bar. So anyways, notice too that RSI has broken above 50 and PPO has broken out above the zero line. So that's supportive of a move higher. And Tesla has had a very nice move here off of the deck. We had another impulsive move off the open yesterday, and then they kind of faded it and pulled it back. But looks like it wants to go higher. I wouldn't want to see it come back in here to lose 700 and then fill this gap and then back to the trend line here at 685. But it is looking pretty good. I just want to show you the daily chart where we're at. It got rejected here at this gap. So we've got a gap from 720 up to almost 740. I don't have it really marked perfectly, but 338, or excuse me, 738, 740 is where that gap would be filled. And then if we can punch through there up to 760. Has been a lot of order flow in the name. I think a lot of people are looking for it to go higher. So we're just going to have to wait and see. This was another example. Microsoft had found this support level here at 285, had a lot of looks below, even reached down to this gap, but held every single time. So if you were willing to be a little patient with it and say, look, we've spent like 10 hours of trading here, and the bulls have held the line at 285, then that was your reward, a move back up through 286.50 with what looks like a little bull flag. Now, I bought this here. I bought the move, not the big candle. I bought the move above 286.50. So I'm in calls looking out to next week, August 13th, and hoping for a move back up to 290, and then that'd be a nice little win. I don't want to see it roll back down below, just like on Apple, come back into 285. I'd have to take the trade off at that point. With shorter term stuff, if it's not moving in your direction, it means you're losing. So, and you don't have a lot of time to figure it out. So, excuse me. So that's looking productive. Amazon, man. Big gap down from earnings. We've known that. We had this 3,300 identified as a key support level. That's why we put the box the way we did. And with the morning sell-off, price came right into 3,300, and then a big impulsive bar off of that level. I mean, it's been a while since I've seen Amazon move that fast to the upside. You know, a lot of times you get these little, steady, constant buying pressure, but that was impulsive, and now it's flagging right below 33.75. And so the real prize, I mean, this would have been great. Get a $75 move in 2 hours. 2 hours is awesome. But if they buy up these FAAMGs names after the earnings turbulence, you can get long above 33.75 and set your stop just below and see how far Amazon can push up into this $200-something gap. So that's going to be real interesting. And if you're any kind of Amazon trader, you're probably already all over this level. But if you're not, this sets up as a really nice high reward, limited risk scenario. Why? Because you've got the whole gap to fill, and you can set a stop. Give yourself $10 or whatever you think, whatever heat you can tolerate, and then get long and see how far they can push it. And speaking of, whatever kind of heat you can tolerate, I know these things are expensive. If you just want to participate, buy one contract. You don't got to be a hot dog and, get 5 contracts and, then be nervous with every red 5-minute bar. Get something you're comfortable with, and then you can be a lot more objective about your trading when you see that little red bar that in the whole scope of things is meaningless. You won't get shaken out of that position. And so, just have comfort in that, in your position size. And then, don't try to make a killing on one stock, on one trade, and be absolutely mortified for every moment of your waking hours that if it turns red, I'm dead. Just get one. Or if it's too rich for you, don't get any. Focus on the ones that have been working for you, that are more in your comfort zone as far as your outlay for a particular contract. Google, again, got support off of this gap support here. Came right back up to this level. What is that level? That level is 27.15. Yeah, if it can take out 27.15, probably going to run right up here, back up to 760. So this is kind of like the midpoint between the high and the low. So also notice how momentum is curling up here. And it's also interesting, quote, after all this turbulence, RSI never lost the 50. So that still remains green and strong stock. So this is one where you get that breakout here, you can get long and look for a nice move back up. Netflix was soggy, back down here to 510, 508, right in there. It's got to hold this level. Got to hold it. Pure and simple. If it doesn't, you're coming back into 500. If there's market turbulence or just, sogginess limited to Netflix, you got to have the prior lows hold in order to keep the bull case alive. Semiconductors had a nice day. We, sold off hard, got the impulsive move back up, and then right up to the prior high. So today, if we can take out that high, which is about 267.50, we can carve new ground into blue sky territory. And I want to pose the question to you guys. What do you think is the thing that is most important about yesterday's price action? Maybe not the most important, but one like encouraging sign, would you say, when you look at this price action coming down here and then coming right back up to the prior high? For me, it's we took care of old business. We took care of old business. The old business was the gap. And a lot of times price does not want to advance until unfinished business is taken care of. So when we got this scary move, like, the world is ending, and it came right down to fill this gap to the penny, and then reversed back up to the prior high, now we have no reason to look back. We're not always looking over our shoulder. Oh my God, that, gaps get filled, and, there's always that lingering feeling when you've got gaps just below that you're going to get that move to come back in and fill it. Well, we've already done that. So now this gap is taken care of. It disappears off the chart. We can key off a 267.50 and see if we can plow to higher ground. AMD continues to work. Remarkable run. What I've done here is drop in a set of, or created a channel with the price action. And so we've been working nicely inside it. I would say as long as we're inside that channel, we're safe, and the door is open for higher prices. This is all blue sky. We talked about Jesse Livermore, impulsive moves as price crosses par, which is 100, and we've certainly got that. And just a tremendous amount of call buying out there for these guys looking for more. And I'm not talking about just, some hedge fund guy or some big trader shooting off 1,000 contracts for Friday, which is, a dart throw. I'm talking out in October, out in January, out in September, more strategic kind of placement of options. I saw a lot of, what was the strike that I saw? I think it was October 125s seemed to ring a bell. But like going out in time, higher premium, farther out in time, not just looking for a hit for Friday. I like those kind of signals in the option chain. It shows, institutional support, and it shows that they think higher prices are coming. And I want to mention something on AMD that I noticed yesterday. I belong to a couple of other chat rooms. I don't really participate. I just watch. Occasionally, if I have something to offer, I'll make a post, but it's few and far between. And I saw some traders trying to short AMD while this thing is ripping. Trying to put a short on this stock right here, right now, is almost like a kamikaze run. Could it work? Could you be the one guy that has enough fuel to get back, that doesn't run out at sea? I don't know. And I think the allure of trying to short the tops of something that's breaking out or a stock at all-time high is, I think it's fueled by ego, that you can be the guy that says, I knew it was time for it to roll over, or I told you you should have gotten out, or whatever the case may be. I think it's a thing of trying to prove everybody else wrong, if that makes any sense. That all these call buyers, and you're gonna be the guy that buys 112 puts for Friday and pay a pretty penny for them, and then it leaves you behind, because this has been going on the whole time, not just yesterday. This is the day before and last week. They try to short it here, and then they try to short it here, and then they try to short it here. And if you say to yourself, look, I missed it, and it's too late to participate, wait for there to be a technical signal to short it. Wait for this channel to break. Wait for price to get below the 8 and the 21 day. Right now, we're well above. So if you're going to short something, you've got to have a technical signal. You've got to have a reason to do it. There's got to be a trigger. The trigger could be dropping out of this channel. Like I say, if you use moving averages like I do, if it drops below the 8 day, it's going to drop below this channel. And that would be your first technical sell signal. But other than that, I think being long is right until it's wrong, if you know what I mean. Stocks can go way farther than you think they can. And so stay in the trade. And one of our lessons from last week was make price take you out. Make price take you out. The objective of any trader is to stay in a winning trade as long as you can, and not arbitrarily take yourself out and then watch the thing continue to run. So anyways, that's just a few thoughts on AMD. Ron from the group had given us this idea on GGG, which is Krakow. Well, we got the breakout yesterday. So if you had that alarmed, good job. Now let's just see where it goes, and hopefully get a drive higher. If you're willing to give it $2 a heat, you can still get long, or you could just watch it. And if you get a quick back touch of 78, you can hit it there, or get just any kind of a red day to day, hit it there, and you'll get a closer entry. Of course, you never know. You could be waiting a long time. That's all part of trading and having your alarm set. And speaking of alarms, I have found some element of success by setting 1 million alarms. back here at this high, if I were watching this stock, I would say, you know, that's a high. So mark it, alarm it. It may not trigger for a week, a month, 2 months, 6 months, 4 years, until it does. And so you would have long forgotten about this stock after all this time, and you would have missed it. So when you're flipping through charts, if you take an extra 10 seconds and set an alarm, then when those alarms start to fire, you can take an objective look at that particular stock at that particular time, and you can objectively decide whether you want to take the trade. Getting an alarm is just a heads up. That's not a requirement to get long or take the trade, but knowing is better than not knowing, and then looking back after 3 months and, you know, this $78 stock is $140 or whatever, and just because you missed it. So set yourself a bunch of alarms. And one last setup I want to show you is this AFRM. This is in the same buy now, pay later space as that Afterpay, that Square bot. And so we get this move off the floor. Now, if price can take out 70, it opens the door for 79 right here and potentially higher. So affirmed alarming 70 would be a nice place to engage it if you were looking for a stock to give it a long try. Now, what I want to do, if I can do it real quick, is run through these sector ETFs. This is materials, big bounce off of support, off of all those EMAs. Now the door remains open for a move to 85.50. Energy, bounce back day, up almost 2%. Still not going to get involved. I'm going to wait for 51.50 or, yeah, up by the 50. And make sure that we got something that's real and it's not a head fake. But very interesting that that price was up almost 2%. And yesterday, financials, it's right there. We got all the moving averages below, and where price is poking its head out of this trading range. If you want to take it now, that's fine. If you want to set an alarm at 37, that's fine. Or just use financials as a measure of cyclical healing or cyclical rotation, where financials are a cyclical industry group. And if it starts to break out, it should be a good signal for the other stocks that we follow in the cyclical space. Same thing with XLI. We got this $2 box. We were at the top. We went to the bottom 2 days ago, and we traded in the same range yesterday. So alarm 104, you get a breakout there, take it long, or just use it as a trigger to drill into industrials and find yourself a name or two. Healthcare's been doing magnificent. Just running away here, up 1.4%. We got involved down here on this breakout above 125. Just, I haven't mentioned it in a couple of weeks, but I would roll and protect, stay long, bank some profits, stay in the trade. Price has not taken you out, not giving you any reason to get out. But as you know, I like to have getting paid be part of the plan. So, and buy more time to stay in the trade. So, you can look out into August or even September, that if this thing keeps rolling, that you can participate in it. So I continue to like it. And here on XLY, if Amazon gets going, it's 24% of the index. And so this uptrend line held, and now we're driving towards the top. So let's see how today goes. See if we can get some follow through. And let's see what Claritas says at 10. I'm going to be very interested in that. And if he reverts to Jay Powell, that should be supportive of the markets. If he sounds more like Chris Waller did on Monday afternoon, we could see some red bars. But I don't think so. I think he's gonna be talking exactly the way the chairman was talking on during his press conference and recent rate announcement. So let's watch that. Hope you guys have a good day of trading. New viewers, I'm glad you're here. Hit the subscribe button, hit the alarm bell. Join our team. We've got a lot of motivated traders that are trying to do a good job and improve their trading. And I'll do my best to keep you loaded with actionable content that and levels that you can focus on your execution. And I think in that way you'll become a better trader. Go back to the beginning of the tape. You will see how to register for all my content. I encourage you to do that. That way you'll get everything I send out, morning, noon, night, weekend, whenever. You'll get a copy of it and you won't have to go hunting for it. So we'd be glad to have you. And longtime viewers and followers, thank you so much for helping me build my channel. I really appreciate it. I'm getting the sense that we're getting a little bit of traction out there, and that's been very rewarding over the last couple of weeks. So have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.